early signs of green shoots from the FI side of the desk in the Indian markets. Are they coming back, Ajay?
Well, hope so, Tanveer. We've already seen some reasonable amount of buying happening from the FI side in Indian debt market. There were big sellers, but now around $7.5 billion buying has happened. It starts with the debt side. For the full year, there were sellers in debt as well as in equities, but they returned first on the debt side. Even in many days of November, in fact, 600 crore buying has come in equities in November alone. So there are early signs that probably FIIs are coming back. India was not alone. FIIs were had shunned emerging market as a pack, and India was also took it on the chin because of that. And the entire emerging market currency pack was weak. But early signs are that FIIs are coming back. So what are the factors which will determine whether this resumption will continue, or will it be a big money will start reversing back to equities from the FII side? That's the question, and that's what we'll be posing to Rana Gupta, the FII voice, on the show today.
Yes, exactly. That is going to be our question to Rana B. Gupta, MD, India Equities and Manulife Asset Management. Rana, hi, morning. What is it that you're witnessing when it comes to flows right now? And would you say that FI optimism is back, because things now seem to be turning just that wee bit for India, especially given the crude cool-off? I would say that is a big silver or rather bonus point.
Yeah, hi, good morning. So you're right. I think to take a step back, I think if you look at the FII selling that has happened, and we do track the FII selling trailing 12 months as a percentage of free float market cap, that number is reached a low as it was in 2016, 2013, or even 2011. So the worst of FII selling is over. It's probably over, I should say. And I think looking forward, there are few things that has turned. You pointed out about the crude. I would additionally point out that last month, the trade deficit number improved from a minus $18 billion per month to minus $14 billion. So that's an improvement. Then and that means that current account deficit number should be pretty stable. Also, I think last month the GST collection improved to 1 trillion rupees per month after being stuck at 0.95 trillion for a fairly long time. So that should mean, fiscal deficit part should also be stable. So all these top-down developments are better. That said, I think as FI investor, we are turning constructive, but there are several in terms of earnings, that picture has been mixed. So while it's positive, but pretty selective on sectors and stocks.
Okay. And where do you think the excitement is in terms of value in the market right now, sector-wise?
So I think the background to this is that right now, if you look at the entire emerging market or even the global, I think the financial conditions are tightening, right? So therefore there are pressure on equities, and you have seen the stocks getting derated and whatnot. So therefore I think to have good returns from here, one has to look at sector and stocks where the valuation is in line with average or maybe even cheaper, and the earning growth drivers are coming together. So we see that kind of opportunity clearly in retail deposit funded private banks, which has a lot of corporate exposure, because given the rates environment is pretty firm and they are retail deposit funded, their margin should be better. And on the other hand, given the corporate sector, the asset quality was under pretty much trouble for last 3-4 years, and thanks to the IBC, it looks like the sector is coming out of that. That should mean credit costs should fall too. So put everything together, I think earning growth drivers coming back, whilst valuation still looks average or lower than that. So that is one sector that we would like.
Right. Rana, what is it that you're making of earnings so far? And would you say that perhaps is a deterrent at a time when crude prices are turning around? Yes, you've got the US equity markets, which have been getting a little shaky off late. But the fact that the earnings have not really managed to impress the street, and they have been at best in line, would you say that that's a little bit of a deterrent, which is perhaps keeping Indian equities a little capped on the upside?
Well, that's true, because we were discussing that earnings pictures at best is mixed. The margins have come under pressure and earnings have been downgraded. Now, there are two things over earnings. First of all, we think more downgrades are likely, And but having said that, the earning growth should be still in pretty healthy double digits. Now, but this earning growth will be led by certain select stock and sectors. So therefore, I think, to your earlier questions, what we were saying that while top-down being constructive, one has to be pretty careful about the sector and the stocks where the earning drivers are coming together. We shared the corporate banks as an example. I think, to share a few more examples, I think there are certain select consumer companies that we like where the margin headwinds are receding. So I think that is another sector where the earnings should be quite strong. Then we think in the healthcare sector, in the mid-cap healthcare sector, the healthcare companies which are having exposure to branded generics in India and other emerging markets, that is another subsector we quite like. So one has to be very selective about whether earning growth can be reasonable or strong. But earning growth risk is there. I think one of the risks is coming from the NBFC sector. We do think that this problem has been contained, but this would also mean that the non-banking finance companies will have to slow down their growth, which should slow down the aggregate credit growth. And it's not only about NBFCs, the sectors it has lent to, like automobile, then micro and small medium enterprises, though their earning can be downgraded because of timely and adequate lack of credit availability.
Okay, yeah, that's fair. Rana, very quickly, how are you looking at the crude fall benefiting the market? Are you playing that theme?
So I think there are. For example, oil marketing companies and some of the state-owned companies there. Some of the direct plays are there for when the crude falls. The way we look at it is we kind of look at some of the structural drivers. For example, if you can think about certain consumer companies, there also crude is one of the inputs, right? And we like those companies in any case, but a crude fall will perhaps give them an earning lift. So I think we would look at in certain consumer companies where crude is an input to play a crude fall. But even more importantly, if you look at the market overall, a crude fall lowers inflation expectations, which means that the RBI may not have to hike rates. So that is also something that you look at, and you can play that through some of the select financial stocks also.
Okay, Rana, great to have you on the show. Thanks so much for taking the time out and, making sense of really what's going on with the market and what is the FII mood like and what is it that they're doing that explains the flows getting optimistic clearly back on India once again.